Hello and welcome to Money Matters. I'm your host, Faith Katai. Today on the program, we are discussing a topic that has become a very important source of savings, loans, and financial support for many communities. Village banking across the country. Village banking groups are helping people save money, access credit, start businesses, and meet family needs. However, while these groups offer many opportunities, they are also come with risks that members should understand. And to help us discuss this topic, I'm joined in the studio by the Public Relations Officer of the Bankers Association of Zambia, formerly known as BAZ, MIRIAM ZIMBA, who will share valuable insights and practical advice on how village banking can be used responsibly to actually improve financial well-being. Madam, welcome to Money Matters.
Faith, it's such an honor to be on Money Matters.
Okay, just to start with, tell us, what is a village banking? What is village banking, and also how does it work?
Thank you so much. So a village bank is an informal financial services savings setup that members come together in a particular community and pool their resources together and also guarantee each other's finances for onward lending to each other in order to grow their financial portfolio. That is how we would define it in short.
Okay, we are seeing this village banking becoming increasingly popular, especially in rural communities and now even in urban communities. Why has it become so popular, especially in rural and low-income communities?
So thank you very much once again. Like you rightfully mentioned, may I draw your attention to the FinScope survey study for 2025. The results were recently shared and disseminated, and that currently puts the country's financial inclusion levels at 80.1% as of 2025, the time of the study, from the previous 69.4%. So we can see that financial inclusion overall has increased by about 10.7%. This is over a period of 5 years. So then if we break it down and look at rural financial inclusion levels as well as the urban financial levels, you will find that in the rural areas, financial inclusion actually increased to about 84%, to 88.5%. That is in the rural areas from the previous 84%. So all this is speaking to the growth of financial inclusion. But then what is driving this financial inclusion, you may be interested to know. So we have both the formal financial services as well as the informal. When we talk about the formal financial services, we're talking about banking, we're talking about mobile money, digital financial services, we're talking about insurance, we're talking about pensions, and all these that are formally regulated by the financial services regulators. But we also have the informal groups. So most common to our setup here in Zambia, we have two that we can speak to. There could be many others that are called by different names, but for this interview, probably we'll stick to two. So we have the Chilimba group, which is a revolving fund that money goes from one person to another. And most of these Chilimba groups, you'd find that there is no interest gained. It's the same money that circulates among people. So how does it set itself apart from a village bank? The idea behind village banking, like you rightfully say, it started in rural areas, but it has over the years evolved and now being widely adapted even in the urban setup. And it was started mainly by the female population. But again, with the evolution of time, we've got more of, it's now being accepted in that there are certain groups that are still women only, and there are certain groups that have a mix of both. And these have evolved from just being in the rural areas now to even urban areas. So that is what has been happening over the years. And if we look at the findings from the latest FinScope survey, we notice that financial inclusion is growing largely attributed to both the formal and informal financial services put together. These are the interesting results that we are seeing, the improvements that have been made over the last 5 years.
Interesting. I've observed over the years that most village banking groups, the participants are female.
Yes.
Yes. Would you give a reason to that?
So we can give a background to that, yes. For a long time, a lot of the female folk were lagging behind in a lot of developmental areas, not just in financial inclusion. When you talk about education, you talk about opportunities to businesses, opportunities to jobs, opportunities to other ways in which they can build their income base to be able to sustain themselves. And you also agree with me that we have a lot of households that are now female, dependent on the female member of the house, or they are female-headed households that are also growing in number. So because of that, and because of the background that a lot of women were left behind in terms of financial inclusion, now we can see that the women coming together with ideas such as Chilimba and Village Bank in order to empower themselves. Because for a long time we've had a lot of our women depending on the male folk, but then I'm sure they've realized that they can also do it on their own. So this is how the idea of village banking was birthed. Yes, it was birthed among the women, but like I earlier said, it's now growing, and we are seeing it to become more widely acceptable even among the men. So in line with that question that you've asked, you'll be interested to know that female financial inclusion levels have grown to 79.1% from the same FinScope 2025 survey, from the previous 67.9%. That was in 2025 years ago. So this is quite impressive, but we are still lagging behind because the financial inclusion levels for men is currently at 81.4% from the previous 72.2%. So we still have a long way to go, but we are very happy as a financial services sector that the segment of our population, which is the females, that was lagging behind, is now being onboarded, and the numbers look impressive, and there's so much more we can do as a country, as a sector, to bring those numbers even up further.
Great. Let's talk about the benefits. What are some of the benefits of joining a village banking to a family, to a business, and to the community at large?
Okay, so a village bank brings together resources from the members. So it's close-knit, so you'd find that for those that feel they're not able to face certain financial service providers, the formal ones, we still have people who just out of fear would not enter a microfinance institution, they would not enter an insurance or pensions institution, worse still even to enter a bank. And also we have those that, because of the far-flung areas that some of these female people live, and some of these people in rural areas, they do not have access to these formal financial service providers. So then the village banking becomes advantageous because, one, it's close to their community. Two, it is close-knit. They know each other in that community. They have access to these funds almost immediately, every time they need it, and they have, depending on how they've built their confidentiality and trust amongst each other, it's something that you can lend to somebody who you know is going to pay back for the greater benefit of the group. So therefore, meaning that as an individual, if I'm a member of a village bank, I have access to my funds to either for personal use or for investment. If it's for investment, I'm probably growing my business. If it's for personal use or family use, I'm doing it for the betterment of myself or my family. So it is very much helping to build families, communities, and also to uplift individuals.
Awesome. In your experience, Miriam, what are some of the most common mistakes people make when joining a village banking group?
Okay, thank you so much. That question arises a lot, and we say that village banks are built on mutual trust. So usually a village bank, it's very rare that you'd find people who don't know each other. You'd find that even if in a group there's maybe 10, 20 people, you'd find that even if not everyone may know each other, which of course would be the ideal for you people to know each other very well in terms of your home address, your income status, your sources of revenue, and all that. But then you'd find that even if they don't all know each other, but the greater majority would tend to know each other. So those are some of the things that we need to look at. In order for this initiative to work, there has to be mutual trust. There has to be proper due diligence among the members. People need to know each other. People need to know where this one stays. And also to avert some of the risks, some village banks that are more advanced than others have even gone a step further and tried to formalize their setups by having a constitution in place. So then all members of that particular village bank are party to this constitution by way of signing, meaning that they agree. And that constitution is going to outline how the monies are shared, how the monies are lent out, the period in which one can borrow and pay back, and the consequences of failing to pay back on time or trying to make away with other people's monies.
Key, you've mentioned something very, very important. One thing to look out is a constitution, come up with a constitution which will stipulate the consequences of someone not paying on time, someone defaulting to pay the loans. That's very, very important. Yeah. Okay, so someone would ask, maybe they're watching this program, to say, it's too late for me to go that route, like, it's too late, I've messed up, I didn't look out, like the village banking I'm in, I have messed up. What would you say to them?
So in as much as I would like to agree with you, because the best time to act was yesterday, but the next best time to act would be today itself. So this information is here, we are sharing it. There have been many other brilliant minds before us that have also shared the information, and for those that may have missed, this is the time now to pick up. It's not too late. Try to formalize getting to know each other, what we formally call in the financial services sector as know your customer. So have some kind of due diligence, even at basic level, and have somewhere where people sign or agree. Even if it's a drafted constitution, let your community leaders, your civic leaders, your village headmen, or anybody who you trust, who you look up to in a particular community, be able to help the group, guide them and show them the do's and don'ts, and something that can stand in as a constitution, and get to know each other and put in place rules that work for the group. We cannot have rules that cross-cut from certain village banks into others because the variances are very different. So what works for one village banking group may not work for everybody else, but it's always important to build on mutual trust and to ensure that we are borrowing with the intention of not defaulting or not defrauding other members, but building the general interest of the group.
Wonderful. We now go on a short break. Stay tuned. Welcome back. In case you have just joined us, you are watching Money Matters, and we are looking at how village banking can be used responsibly to improve financial well-being. My guest in the studio is the BAS Public Relations Officer, Madam MIRIAM ZIMBA. Let's talk about the risks. What are some of the risks of joining a village banking? Some of the risks to consider.
Okay, so generally, finances can be very risky, especially for both the borrower as well as the lender. It's quite a risky business to venture into. This is the reason why you'd find that measures are put in place to have that interest because it's a risk. You're dealing with people's money. So in a bank, you have an interest rate that goes with your loan, and that goes for a lot of other form of financial services. But even in village banks, in order to grow your portfolio, they'll attach that interest. Other village banks have now gone even a step further and included insurance in case there's a member who borrows and fails to pay back, or unfortunately passes on. Who bears that risk? So this is the reason why a lot of these village banks are now moving into the formal financial services space in order to cover those risks. So we've got risks such as defaulting, which is highly unfortunate and should not be happening. We've got risks of people failing to pay back on time. We've got risks of people just being scammers, crooks. They just run away with people's money. We've got risks of people even losing their lives or losing their source of income that is supposed to help service these loans. So this is the reason why it's very important to cover some of these risks, and we keep looking at ways in which we can better address some of the risks that are being faced in these village banks.
Okay, how important is trust, transparency, and good record keeping?
Very, very important. It's important not only for the person who acts as your financial or treasurer in the group, but even at a personal level, because you're dealing with human beings. Unless if you are dealing with, you've gone smart, you're using maybe a device or an app that automatically calculates and keeps records for you. But if you are at that basic level where records are being kept on manual records, it's also important to have your own, so that at the time of share out, you'll be able to reference from your personal records how much you've borrowed, how much you've been saving, how much interest you're expecting based on the agreed upon interest in the village bank group. So those are some of the measures in which people should ensure that these things are done. So trust is also very important. This is the reason why we say village bank groups work better for people who know each other, people of a certain community who are localized and are able to reach out to each other. Even in the middle of the night, you're able to knock and say, I have this issue, may I please have money? So mutual trust is very important. Transparency also is very important on the part of the group. Whoever is responsible for managing the books of the group should always ensure that there is a trail and members of the group are brought to light, and not having certain information hidden because we think these people might not be able to understand. And also to be able to discuss openly where you don't understand, because we are at different levels of numeracy and financial literacy. So it's important that questions are asked and questions addressed appropriately.
Great. Some people argue that actually village banking discourages people from opening formal bank accounts, while others see it as a stepping stone into the formal financial system. What's your view?
So because of the evolution of time and the way we had initially said that a lot of these village banks are now bordering between formal and informal. Of course, the whole setup itself currently is viewed as an informal kind of savings group or a savings mechanism. But a lot of these are now adapting. They're trying to formalize these groups. Others have grown and have become cooperatives, which are recognized even by the government because there is a mechanism for registering cooperatives. Then we have those that have formalized their services. They have a constitution that is attested to by the rightful authorities. So you can see that a lot of these, even though they are in the informal sector, they are working on ways in which they can formalize. A lot of these village bank groups now are doing away with cashing out using hard cash. People are being paid through their mobile money, which is a formal way of doing financial services. Others are being paid through their village banks. So you'd find that if you're using your mobile money or your bank account to receive or pay money for your village bank, already you're getting into the formal space. And already you'd find that you're able to extract a statement that is going to be able to guide you. So yes, they are there. It's not discouraging. Actually, it is encouraging formalization of a lot of these groups. And we are looking forward to the day that a lot of these others who may still be lagging behind will also get to that level where they'll be semi-formal as well as informal.
Okay, so as the Bankers Association of Zambia rolls out financial literacy programs, what key messages do you want every village banking group to understand about managing money responsibly?
So would like people to look at various options in which they can grow their financial base, because a village bank is put in place for reasons for not only lending to each other and not only growing the interest within the group, but then you'd find that there are certain times, depending on how many times people put in money into that particular group. Others do it on a monthly basis, quarterly basis, weekly basis. But then what happens when money is put in, people have paid back their loans, and we don't have immediate need among the members to borrow? So what happens to that money? Does it just lie idle? So this is where now we ask for that partnership. Look at ways in which you can take advantage of the many formal financial services that are provided out there, and see that if you grow your financial base to a certain level, you can probably put it in a fixed deposit to say, if you envisage to say in the next 2 or 3 months, we will not have any need for borrowing, we can put away that money so that it gains interest in that particular account. You can also put aside to say that we won't need so much money for the next 6 months or 1 year. Look at options such as treasury bills from the Bank of Zambia, which offer very attractive returns. You can look at bonds. You can look at other investments that can help grow the money, because it's not all the time that there'll be people who will be borrowing and paying at an interest, but you can diversify your resource base in order to grow that money. So those are the things that would like the people out there to know. Of course, KYC, very important. It's very important to know each other, to have some sort of agreement amongst yourselves in form of a written document or a constitution. And also take advantage of having banks, mobile money services to also put your money for safekeeping. Let's avoid moving with very large sums of money in the name of we are going for a share out, because then you'll be heightening your risks of being scammed or being attacked by those that have criminal minds.
Okay. Lastly, Miriam, as we come to the end of the program, what are the top 3 pieces of advice for everyone who wants to use village banking as a tool for building wealth and achieving financial security?
So firstly, we would like to say it's a very good initiative. Very good in the sense that there are certain village banking groups that started from very minute resources, from very informal or very small groupings, and have now grown so big that they are able to lend to each other, and they're even able to lend to other money lenders. We've heard of very successful stories of certain groupings within the country that even have investments outside Zambia's borders. We've heard of groups that have got investments in places like Dubai, in a lot of these places across the globe, which is very motivating. So for those that are not yet in village banking groups and would want to join, as usual, ensure that your group is well protected by some kind of a constitution, have in place proper documentation, get to know your members, and also look at the various ways in which you can build your financial resource base. It's a very important tool, because these are the tools that when we look back and also going forward, as we measure the country's financial fitness, the country's financial health, financial inclusion levels across the country, these are some of the parameters that the survey, the FinScope survey, which is done every 5 years, will look at in order to position our country on a growth trajectory.
Okay. Miriam, thank you so much for making an appearance on Money Matters.
Thank you so much, Faith, and we're wishing everybody out there who is about to join a village banking group all the best, and for those that are already in the village banking groups, we're telling them that there's still room to grow. Thank you.
Okay. Viewers, that's all we had for you on Money Matters. My name is Faith Katai. On behalf of the entire Zonis production team, thank you for watching. Goodbye.